the undue influence. And again, it's I think uncovering it and recognizing that this relationship exists, that this is one really important dimension of not just how Silicon Valley works, but also, look, the government has played this really generative role in seeding research, in higher education, creating people who can be part of this, giving people opportunities to be part of this industry, through immigration policy that brings people in from around the world. U.S. was a tech leader because of these public investments and this distinctly American relationship between public and private sectors, which only the U.S. it only plays out in this way here. And that is a value add, a regional advantage, a national advantage that in the last, decade plus, we've been pulling back. And particularly the last administration was, I feel, it was an own goal in kind of immigration policy, disinvestment in certain things that were really chilling the atmosphere for future innovation. So, you can't expect these companies, no matter how big their balance sheets, to take on the work of the next moonshot, even though Google likes to, frame itself as that. The money isn't as big, and the public mission needs to be public. It shouldn't be serving the interests of a company, a private sector company. That isn't their job. So I'm looking, again, kind of going back to thinking about what's next in the new administration. You're seeing these, already Biden is making, executive order the last couple of days to invest in green technology. Defense is one piece of a broader and one would hope kind of reinvigorated government private sector research relationship that's good for business. It's good for the economy.
Well, Margaret, we have about 2 minutes left, and I want to ask you, earlier today here at the Year Ahead, we had Marcelo Clore from the SoftBank Vision Fund, and one of the things he said was he's making a major investment, SoftBank is, in the Miami area as part of their Latin America fund, and it just kind of raises this question, which, we've both been doing this a long time, so we've heard it again and again, but it does feel more urgent now. Is Silicon Valley imperiled? Does the focal point of technology in the U.S., is it going to Miami? Is it going to Austin? In the now minute plus we have left, what do you think?
Not yes and no. So there was already decentralization before COVID. COVID has accelerated a lot of things, work from home, decentralization of startup activity. That's just gone faster. The money is concentrated in the Valley, and there's still a lot there. Most of the activity is still there. And I think we need to remember that one of the secret ingredients of the Valley is time. It's multiple generations of innovation, one company after another after another. It's going to take a long time for other places to catch up.
So you're in Seattle, right? So you're not moving anytime soon. Seattle, with Amazon's presence, continues to be a technology hub.
Yeah, even though the winter weather is better in Miami, I will be staying here in lovely Seattle. Now, Seattle is, in a way, it benefits from a symbiotic relationship with the Valley and is on its own a major tech hub and will continue to be so.
Well, Margaret O'Mara, there's more we could talk about. We have to leave it there. Thank you for joining us. I'm Brad Stone.
Thanks.
Thank you so much for joining us. We are closing out the show today with a very special guest, Airbnb CEO and co-founder who's had a few things going on in the last couple of months, Brian Chesky. Brian, thank you so much for joining us.
Well, thank you for having me today, Emily.
So you've been a public company now for 7 or 8 weeks. We've got a vaccine rolling out slowly. When the pandemic hit last year, you said you felt like you had been hit by a torpedo. So just where's your stress level right now between like 0 and torpedo? What's going on inside your brain?
If I was a captain of the ship, the waters are a little calmer than they were last year. There's nothing quite like being a CEO of a travel company and you lose 80% of your business in 8 weeks as you're preparing to go public. And if that's not crazy enough, then going public as that company, that's also pretty wild. So it was a very eventful year last year. I'm hoping for a little bit more predictable year this year.
So on that note, you've got a new report out on travel trends in 2021, and you said you can't look too far ahead, but you can give us a picture of this year. What is travel in the year ahead and the waters, essentially? What do the waters look like to you?
Yeah, so I think that what's going to happen is you think about where we are today. Most people have been in their homes, and they haven't really been able to leave their homes very much for nearly a year. And this travel season, people will mostly have been sheltering in place for more than a year, working from home. And we did a survey, a representative survey of American travelers, and they told us a few things. The first thing they told us is they miss traveling. In fact, Americans miss traveling more than any other outdoor activity. Second, Americans are telling us they actually are planning to travel this year. 54% of Americans surveyed said they either already are planning their trip or plan to travel this summer. But something's going to be different about how they travel this summer. You see, the thing people don't miss is business travel. They say the travel they miss the least is traveling for business. They don't miss landmarks. They don't miss crowded lobbies. They don't miss getting on double-decker buses. What they miss is, the thing they feel like was taken away from them, connection to their family and their friends. So the kind of travel they want is meaningful travel, not mass travel. They want to have meaningful time with their friends and family. And so they want to get in cars in America and travel within a tank of gas about 200 miles, typically staying in small communities with their friends and family. I think that's what travel is going to look like this year, a shift from mass travel to meaningful travel. And I do think it's going to be really eventful, certainly summer for travel.
Okay, so summer is your time frame when you think things start to open up. And when that happens, does it look like the roaring 20s? I mean, give us the picture.
Well, it's a little hard to say. Anyone who was in the business of predicting, I said in my letter, anyone in the business of predicting the future was humbled last year. So I'm going to try to stay within the constraints of what we think will happen. I think it's going to be gradual. And, it's hard to say what month it's going to happen. I use summer for a proxy. For the moment, people feel safe leaving their homes. I think vaccinations are going to be critical. One of the two of the top reasons people want to get vaccinated is they want to see their friends and family and be safe, and they want to travel and be safe. But one of the things they want to do is they want to travel to places where they're either private, not around a lot of people, or in cities and communities where most people have been vaccinated. So I think it's a little hard to predict. I think it's going to be really moving in line with the health crisis. But yes, the roaring 20s did come after the Spanish flu. And so I think people are yearning to get outside and to be together. I think you can't keep people apart for too long. And I think that's something that we're going to learn again. So
we should be booking our summer vacations now to avoid the crush, is what you're saying.
Well, who knows? I'll try to not predict too much. The good news is I don't think everyone's going to be going to the same city on the same date. I think because people are more flexible and they're working from home, they can kind of take, I don't think you're going to have this flood of everyone going on the same week to Las Vegas or Miami or LA. They're going to probably, because not as many people will be flying right away, be distributing to more communities. So I think we're going to see is more people going to more places over more dates. That's going to spread out travel, which will probably reduce crowds. That's what I think will probably happen. Now, these are just predictions, of course.
Now, Brian, my interview with you on IPO day went kind of viral. I told you live on the air that the opening price had doubled, and we all saw your eyebrows go up really high. What was going through your head in that moment?
Well, first of all, I did not know my eyebrows went that high either. But what was going through my head was just, I don't know, at that moment, I think it was kind of a flashback of the last year. Because I remember we started 2020, like a lot of people did, thinking their life would be one thing. And then all of a sudden, our stock just goes down significantly. Probably in the depth of the crisis, our stock was, just a little over $20 a share. And, we had got all hands on deck, and we said, we're not really going to worry about things we can't control. We're going to focus on trying to truly build a great company. And I think at that moment, I think the year crystallized for me. The year crystallized everything we did and everyone that believed in us. It all probably, I think, really hit me at that moment.
So Airbnb last year, in one of those private funding rounds, was valued at $18 billion. Now it's a $113 billion company. In your view, is Airbnb really worth that? You're the guy who has to deliver and make it so.
Well, I don't want to comment on a stock price. I think it's going to get a dangerous pattern for me to start doing that. But I will say that we are building a company for the very long term. I know that probably sounds like a cliche, but I'm 39 years old. So I do intend to be doing this for decades to come. And, I don't want to get into comment of comment on stock price, but I will say that the higher the price, the higher the expectations, and the higher expectations, the more responsibility we feel. So I think we already felt a lot of responsibility before, but I now feel a lot of responsibility for all the new stakeholders, all the new shareholders we have. And, that just motivates us even more.
Now, when this happened, Airbnb, as you said, went back to its roots, focused on homes and home sharing. You put some things on hold: business travel, luxury, hotels, transportation. Are there any plans to restart some of those initiatives?
Oh, sure. I mean, down the road we will. But the thing we are realizing right now is we do think a travel rebound is coming. It's not a matter of if, it's a matter of when. No one knows exactly when, but we want the company all hands on deck focused on this new travel season. And so we think we have a great core business, and that business really is hosting. We have 4 million hosts offering homes and experiences, and we want to make sure that we have as many hosts ready this summer as possible, this travel season as possible, and make sure anytime they need assistance, we're there for them. So again, down the road, we think there's a lot of new opportunities for Airbnb, but I think the thing that got us out of the crisis was focus, and we're not going to forget that lesson.
So, you're now a public company CEO. How has life changed for you, for the company, in the last 8 weeks?
It's like a bunch of my friends who got married, and they said their life didn't change that much after they got married. I guess after kids they do, but in that way everything just feels a little bit more formal. But other than that, we've been operating like a public company for quite a long time. We've had an audit committee. We had a lot of the same kind of controls you'd expect as a public company. Our financials seem to get out every quarter anyway, even as a private company, and not for any intention of our part. So I just think the main difference is just the sense of formality when you're a public company, and just the sense of responsibility is just so much more vast. Certainly when venture capitalists and mutual funds and private equity firms are investing in you, you do feel the responsibility. But when there are hundreds of thousands of shareholders who are kind of like the people you grew up with, I don't know, especially our host, there's a different level of gravity to it. It just feels like a whole other stakeholder, essentially.
Obviously, hosts are really important to Airbnb, the Airbnb community. Also, there's employees. You laid off 1,900 employees last year. Now that things are better, how many of those jobs have you actually brought back, and where? Where are you putting your new resources?
Yeah, so you're referencing the hardest decision I've ever had to make when we had to lay off 1,900 of our employees. The first thing I'll just say is we tried to do everything we could for those employees. And one of the novel things we did is we created an alumni directory. An alumni directory meaning that we allowed anyone that was laid off to opt in to have their information published on our online directory. We had more than 500,000 visitors to that online directory. And so actually what we found, and we've done some surveys of former employees, is that quite a few of them actually been hired in other positions at other companies, and they do seem to be doing quite well. Now, we have hired a handful of employees back, and we do intend to continue to hire employees back. But the other thing I've told our employees is you want to, hope for the best and plan for the worst, and we don't know what's going to happen again. I don't want to ever have to do another layoff, so we're still being fairly cautious about the pace of bringing people back, but I'm very optimistic we'll bring a lot of people back down the road.
Now, anecdotally, as a user, I've noticed that customer service has really improved, and you've been working on building out the customer service infrastructure. That said, customer service has often been cited as a risk factor because, can the customer service of Airbnb really stack up to what you might get at a hotel, for example? Can you talk to us about the resources you're devoting there and how you think that'll evolve as Airbnb becomes a bigger and bigger company.
Yeah, it's a great question, Emily. I mean, we have a great team that leads this. And last year, last summer, I hired a woman named Tara Bunch. She actually ran all customer service and Apple Care for Apple. And she managed a very large team there. We brought her in, and she took a team that I was over. They've taken, I think, things to the next level. And that's part of what it means to be prepared. We don't want to just have best-in-class service. We want to have truly world-class service. And so we're working all hands on deck to make sure that when the travel rebound comes, and again, we don't know exactly when, we want to be ready. We'd rather be early than late. And so we just want to make sure that we have great service. And one of the things we're seeing in the hospitality industry is many other companies are starting to cut back service. As they cut back costs, they cut back services. We want to be doing just the opposite. We want to be increasing service and investing even more. We think now is the time to be investing in making sure that every stay is as great as it can be. So really perfecting every detail of our service. That's what we're focused on right now.
So speaking of the broader hospitality industry, we had the CEO of Hilton on earlier this week at this conference. In the third quarter of last year, we saw Marriott revenue, Expedia revenue drop 57-58%. For Airbnb, it was more like 18%. And I wonder, when travel does come back even more than it already has, are hotels harder hit? Will some of the hotel travel just never come back?
Well, I think the way to think about it is to think about the types of travelers. I think you could break it up into leisure and business, leisure, typical vacation business. I don't think that business travel is coming back the way it ever was. It doesn't mean business travel is not coming back. It's just, I think people are going to rethink getting on a plane for a meeting. Sometimes you'll do that, but we're starting to realize that a lot can be done remotely. A lot of your first interviews with me were in person. Now this interview is being done remotely. So I think what's going to happen is business travel is going to contract. It's not going to come back to the way it was. I do think a new type of business travel will emerge. If you have a lot of people working from home and distributed, they do eventually want to see each other in person. We're not going to live in a world where no one sees each other in person. So you're going to have more of this hub and spoke model where people go back to headquarters for longer trips. So I think old business travel will be replaced by new business travel, but I think that will be longer stays and less frequent. And so I don't think business travel will be as strong. I think leisure travel will go up increasingly because the more you're home, unless you're traveling for business, the more you want to get out of your house and more people have flexibility. And so I think that will increase, and I think that's going to really increase length of stay. And so I think that will be a difficult transition, moving away from business travel and towards longer stays. But that being said, anyone that can adapt can win in this environment for sure.
Now, online experiences, you've really been building out that platform. I've seen, like thousands of reviews for a virtual tour in Paris, or my son is super excited about the Harry Potter magic tour in Edinburgh. What kind of growth have you seen there since COVID, and can you keep that up post-COVID?
Yeah, I mean, the way we started online experiences was really, the idea came from our host. We have experiences which are 3-hour activities in person. Because of the pandemic and social distancing, we had to pause that product last year. And an idea came from one of our hosts in the listening session. They said, what if we just did these online? People don't need to leave their house. And so we launched these 1-hour online activities. The whole idea is there's a sense of connection. It's not like watching YouTube. You actually can do a pasta making class, you can watch a concert, but you're interacting with the other guests and the people, typically done through Zoom. We've seen a lot of growth since then. And one of the things we found is it's a bit like dipping your toe in the water of Airbnb. If going to a different city or get a different town and staying at a stranger's home feels like a big jump for you, kind of getting used to Airbnb with an online experience remotely from your home is, I think, a really great introduction to the community and gets you more comfortable with what a host is, how the whole system works. So that's one of the things we think is really strategic about this product.
Now, if anything's for sure, it's that we don't know what, as you say, potentially even tomorrow looks like. We had a few moments of calm after the inauguration, but the year's already gotten off to a crazy start. You made a big call in canceling reservations in Washington, D.C. the week of inauguration. You reimbursed hosts for the money that they would have made. You've also paused political donations to lawmakers who voted against election certification. Can you give us any update on that and, the responsibility that you feel to make stands on political and social issues that we haven't seen CEOs make in the past?
Well, I learned an early lesson in this because when I came to Silicon Valley in 2007, 2008, the idea was we were all platforms and platforms should be hands off. And the idea, and it kind of was like this old kind of eBay, Craigslist, Pierre Midyar, Craig Newmark school of thought. The internet's kind of like an immune system. Build the community tools and they will moderate themselves. I think that Airbnb, we learned lessons earlier than big tech companies because we had people getting their homes trashed. We had people getting physically hurt or worse. And we started to realizing that we had to take more responsibility for the activity on our platform. If for no other reason to keep people safe, that's a very good reason to do that. And so we've been doing this for a very long period of time. We really try to make sure that we're strengthening the communities we're in. We're not always right, but we want to be on offense. In Charlottesville, Virginia, we got word a number of years ago that we had people in far-right groups, members of hate groups, essentially, that were trying to book Airbnbs, and we prevented them. We did our very best to prevent them. We have an entire operation trying to prevent people that are part of groups that are classified as hate groups booking on Airbnb. What we saw with the Capitol raid was something that was shocking, and we felt like there were just too many reservations and too many people to screen and discern what people's intentions were. And we thought the very best thing for safety that we could do, after having consulted the governors of Maryland, Virginia, the DC mayor, and the police borough, was that we should just not allow people to book Airbnb that week. I mean, obviously, we didn't want to contribute to any mayhem or violence. And so I feel like that was the right decision. It was frankly kind of an easy decision at the end of the day. I mean, you always have to side with health and safety.
Now, we can't ignore the biggest story of the day, which is what's happening with GameStop and Robinhood and what seems to be a movement of the center of gravity from institutions to potentially the people. I'm curious how you're reading this. As a public company CEO, is this kind of volatility and unpredictability unnerving?
I've tried to tell our own employees, let me put it this way. Our company is now used to volatility after last year. I mean, there are very few companies had more volatility than Airbnb last year. And so I think that we're not going to be unnerved personally by volatility because we're looking at the very long term. And I tell people, you focus on what you can control. Now, I do think it's a great thing that more people can be able to participate. That's kind of the whole idea of Airbnb, that more people are able to participate in hospitality. And one of the things we saw is a lot of people are participating as Airbnb shareholders. Now, as far as anything beyond that, probably best not for me to comment. Certainly, I'm not an expert in this matter. But I do think that, I got a lot of phone calls from people when we went public, people I hadn't heard of in a couple decades, people I went to high school with, teachers saying that they purchased stock. And, I think I feel an immense responsibility to all of them. And I do think that, one of the benefits of having a great brand is a lot of people want to be a part of it and they want to own a piece of it. And that just means that, your responsibility is increased. I think that the responsibility of a CEO in America today is different than it was maybe 10 or 20 years ago. I think maybe a couple decades ago, very narrowly, most CEOs felt like their responsibility was solely and exclusively to shareholders. I don't think there's many large CEOs today that feel that way. I mean, the Business Roundtable, you had hundreds of CEOs sign up saying that they believe their responsibility is more than just to shareholders. Their responsibility is to other stakeholders. Of course it is. The best thing for shareholders is that society wants your company to exist in the future. That is the very best thing for shareholders. And that means the people have to be happy with your company. They're going to be evaluating you, the decisions you make, whether you ban reservations to see how you deal with some of the greatest ills of society. And I think the people are watching, and I think that we have to remember that our responsibility is to everyone.
So given that we are in a rapidly changing political and economic landscape, a new administration, vaccines on the way, what is your outlook on this year? If 2020 was the year of a pandemic and a recession and a torpedo, what's going to be the theme of 2021?
And are you asking about just the world, or are you asking for Airbnb? Because
the world, according to Brian Chesky.
Oh God, for Airbnb, it's going to be a year of focus, but for the world, it's going to be a year of hope and togetherness. That's what it's going to be. Some things think about what COVID did. COVID has probably accelerated many industries by 5 or 10 years. What it's really done is digitized a lot of things, right? So many things are now digital, and digitization, in a sense, is like acceleration of numerous industries. And so a whole bunch of things that were popular might go out of fashion. We can guess what's not coming back. I'm certain one thing is coming back: human connection. You can't keep people apart forever. People will be together again. And I think when we are together, we're going to realize that we maybe sometimes took each other for granted before when we were together, when we didn't have everyone. And so I think there's only so many social media connections, digital connections, and Zoom calls that you can do. Eventually, to fulfill you need to have real in-person connection. And I think when we have that, we're going to have a better spirits, a lot more hope, a lot less division. I mean, this is the optimist in me. And I think the best thing to kind of help unify people is to help them walk in each other's shoes and help them be together again. That's the very best thing I can think of.
Brian, a lot of that stuff you talk about in your new report, which I urge folks to go check it out. We've got a new piece on it out at Bloomberg.com. Thank you so much for taking the time to join us. What a year you have had, and really appreciate you sharing your learnings here with us. So thank you.
Thank you very much, Emily.
All right. And with that, I told you we'd have a good closer. Thank you all for joining us for the last session of the Bloomberg Year Ahead Conference, and for all of the attention you've given us over the last few days. I also want to thank our sponsors, Alex Partners and IBM, for making this event possible. You can rewatch any of it on the website. All the recordings are going to be uploaded. We've also got our calendar of events for the year there. Just go to BloombergLive.com, and we hope you will join us again soon. I'm Emily Chang in San Francisco, anchor and executive producer of Bloomberg Technology. More on the year ahead. Bye.
0.7%, and the Russell 2000 is up now by 0.6%. 10-year down 13.30 seconds, 10-year yield 1.06%. Gold down 51 cents the ounce, a little changed at $18.43, and West Texas Intermediate crude down 1%, $52.30 a barrel. After earnings, Apple down 1.8%, Tesla down 2.4%, Facebook and the Russell 2000 is up now by 0.6%. 10-year down 13.30 seconds, 10-year yield 1.06%.
All right, so great story. Pillow King Mike Lindell. You know him from those late night commercials. You also know him because a couple years ago, Bloomberg Businessweek did a deep dive into him. He's an ally of former President Donald Trump, and as reporter Josh Dean is back writing about him again. Laugh at him, shun his business, sue him. The MyPillow CEO will not stop trying to prove Donald Trump cheated. That's the headline. Josh joined us on the phone in New York. Great story. Pillow King Mike Lindell. You know him from those late night commercials. I also know him because a couple years ago, Bloomberg Businessweek did a deep dive into him.
Boy, I could, but that was mainly just because of what it is. But, you know, backstory here, 4 years ago, Josh Dean wrote basically the definitive story on Mike Lindell and the preposterous business success story that is MyPillow. And this is a guy who went from being a crack addict. Boy, I could, but I'm liking on what it is. But, you know, backstory here, 4 years ago, and Josh actually did that story 4 years ago for the and it happened to coincide with the Lindell had with Trump. And obviously, you know, anything about Mike Lindell in the past 4 years have become much Trumpier. And so what it is, the backstory here, 4 years ago, was Josh actually did that story
of those people who I like a memory foam pillow, so I don't use them.
I have to say, my husband one night, because we both were not sleeping, we bought some. I'm not going to say. We have a lot of different kinds of pillows on our bed. Josh Dean, it's a great read. We're going to feature it in the weekend story as well. And Joel Weber, thank you as well. Really appreciate it. For those of you listening in New York, D.C., and San Francisco, watching on YouTube, Bloomberg Business Week, we're going to continue. If you're listening on Bloomberg 106.1 in Boston, Bay State Business is next. Coming up, we're going to talk a lot about GameStop. We've got a headline that just crossed. Senate panel to hold hearings on current state of the stock market and E-Trade restricting purchases of GameStop, AMC shares. It continues to build in terms of the platforms that are restricting trade. We're going to deep dive into this.
Yeah, there's plenty to talk about. Wow, this story just keeps getting bigger and bigger.
You're listening to Bloomberg Radio.
World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Tuesday, January 28th. Stocks are advancing well off session highs. The Dow, the S&P, NASDAQ, all gaining. Sharp contrast to yesterday. But first of all, right to those fast-moving stocks that we've been talking about. The Reddit chat board participants have been discussing. GameStop stopped down today by 28%, and AMC Entertainment lower now by 48%. The S&P up 65, up 1.7%. The Dow up 491, up 1.6%, while NASDAQ is up 186, a gain there of 1.4%. 10-year down 11.30 seconds, 10-year yield 1.05%. Gold lower, a little change, down 39 cents the ounce at 18.43. And West Texas Intermediate crude tumbling 1%, 52.32 for a barrel of WTI. Equities are mounting a comeback from their worst loss since October, as move to limit retail trader speculation in some companies opens the door for hedge funds to load up on stocks that they had been ditching. The International Monetary Fund is calling on its members to increase assistance to poor countries to deal with the COVID pandemic. IMF Managing Director Kristalina Georgieva was interviewed this morning at Bloomberg's Year Ahead Virtual Summit.
And what we look into for the next year are first the race between a mutating virus and multiple vaccines. Second, the resolve of policymakers not to withdraw support prematurely.
MasterCard and Comcast beat earnings estimates. Shares of Comcast are up 7.7%, MasterCard up 3.8%, Visa reports after the bell. I'm Charlie Pellet, and that's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
So yeah, a top story this hour, this day, this week, and I already know that in December when we look back, it's going to be a top story this year. It's GameStop and the like, other names that we don't usually talk about, but all of a sudden they've been really dominating the trade in terms of big moves.
Yeah, look, it's not just GameStop, right? It's other stocks as well. And look, we're just learning moments ago that a Senate panel is planning to hold a hearing on the current state of the stock market, and this prompted by the activity that we've seen this week.
Totally. All right. So let's get into it and let's get you up to speed on some of the day's headlines because they are happening as we speak. Let's bring in Bloomberg News cross-asset reporter Katie Greifeld and talk about kind of where we are. We're also going to get to Jennifer Schulp. She's Director of Financial Regulation Studies over at the Cato Institute, and we'll bring her in just a moment. Katie, though, set the scene. Where are we when it comes to what's going on with GameStop and other stocks that have had some big moves and the trading platforms that they trade on?
Well, it's very much a fluid situation. Obviously, the big story today is that you have apps like Robinhood and other brokerages limiting trading on some of those popular names, such as GameStop, and some of the other, we've been calling them meme stocks that have just taken off this week. And so, interestingly, I mean, as you mentioned, GameStop is sinking today, as is AMC Holdings. And you have seen the benchmark indexes bounce back. For the S&P, for example, it's having its best gain in 2 months, whereas yesterday it was the worst fall since October. So clearly a total flip in who's leading and what's leading. And part of the theory is that all of the hedge funds who were just getting crushed yesterday on their short bets, now that that speculation is curbed, at least temporarily, they're basically regrossing and re-leveraging on their positions.
So, Katie, when you say restricting trades on platforms like Robinhood, what exactly do you mean? Does that mean that if somebody holds Robinhood and they want to sell it, holds GameStop and they want to sell it, they can't necessarily do that?
That's the question. So it's a bit different across apps. So Robinhood, for example, I mean, there are restrictions placed on shares and options, and the fact that options trading is restricted is a really interesting nuance here because that's theorized the fact that you saw just such rampant call buying in some of these names. People were saying that's fueling this bullish feedback loop. So obviously with these restrictions and the fact that you can't trade options, it's clearly having an impact on the stock, whether because, the fact that people aren't really able to trade, the retail traders at least, hedge funds can still trade those names. Or, perhaps it's just a turn in sentiment that, this idea that there could be further regulation coming.
Yeah, we're certainly looking into all of that. Katie, thank you so much. Our own Katie Greifeld, cross-asset reporter at Bloomberg News. Let's get to our next guest. We want to bring in Jennifer Schulp. She is Director of Financial Regulation Studies at the Cato Institute Center for Monetary and Financial Alternatives. She focuses on the regulation of securities and capital markets. She's also a former director in the Department of Enforcement at FINRA. She joins us on the phone in Washington, D.C. Jennifer, forgive me if Schulp it is, right?
It's Schulp.
Okay.
You got it right.
Okay. Want to make sure. Really appreciate you being here. As you know, our top story here. What do you make of what we're seeing in terms of the trades initially that all of a sudden got a lot of these trading platforms' attention for them to all of a sudden start restricting them?
Well, I think it's a powerful message about the power of retail trading that heretofore Wall Street's been able to generally ignore the retail trader. And we're really seeing that that's no longer the case. And with the rise of low-cost trading apps and this kind of increased activity on the chat boards, we're really seeing actions here that are going to make Wall Street stand up and take notice about retail trading. Maybe not call them dumb money anymore. That might be a harder habit to break than just this one time.
Well, I'm wondering what it means for potential regulation. I mean, we're hearing lawmakers weigh in. A Senate panel is going to hold a hearing on the current state of the stock market. This reached the White House briefing room yesterday. Two of the three people yesterday, the first three people to ask questions to Fed Chair Jerome Powell at the press conference, asked questions about GameStop specifically. What is potential regulation that that we could see out of as a result of this?
I think there's going to be a difficult road to walk in trying to find any sort of regulatory path here. And I think that Congress is going to find that as they start digging in. This is obviously an unusual situation, although rallies and bubbles are not, nor is short selling. This is just a different twist with different players taking different positions than where they've been before. We might see some additional regulation in looking at how short selling operates,
right?
Just the mechanics, so that some of these feedback loops that we're seeing here, that might be a place to take a look to see if there's a better way to do things
Jennifer,
to prevent the feedback.
Do you think Robinhood's wrong, Interactive Brokers is wrong? Do you think they should not have restricted trading?
I think that's a tough question. I think as a matter of principle, the traders should be able to trade, but there's also risks to the brokerage houses at issue here as well, clearing risks that I'm not sure that Robinhood or some of these other brokerage houses would be able to continue to operate through the clearing firms and through the clearing process, given how fast the stock was rising. So I think as a matter of principle, yes, individual traders should be allowed to keep trading.
So it sounds like a technological limitation.
Right, more logistical, right?
Logistical and just capital. In order for the firms to be able to put up money to clear through the settlement process, I just don't know that there's not capital limitations on what Robinhood can do to support this trading at this point.
Do you think
I think that's something we're going to find out as we move through these lawsuits.
Yeah, listen, we're gonna come back and talk some more, but we've got about 40 seconds here. Do you think this could potentially be the end of Robinhood, though?
I don't think so, but I think they could have done some reputational damage that they're going to have to come back from.
Wow.
All right. Listen, sit tight, Jen. We're going to do a little bit of news, and then we'll come back with Jennifer Schulp. She's Director of Financial Regulation Studies over at the Cato Institute, and she's a former director at FINRA, specifically at their Department of Enforcement. I mean, a lot of questions coming out, and you want markets to move and operate smoothly, efficiency. It's why we had trading stops put in, right, after some of the big stops we saw from the 80s. We did different measures after the financial crisis, but you have to make sure it's still free markets and free for everybody.
Yeah, you do, and especially with a platform like Robinhood. I think a fascinating story following this will be what is the reputational damage, if any, to Robinhood, and to what extent can it hold on to its customers
I was thinking
ahead of an IPO?
We already have a Congress that's got a plate full, and now they're going to be holding hearings on the state of the stock market, which is 2021 off and running. Let's get another check on world and national news. Over to Nancy Lyons we go in D.C. Hey, Nance.
Hey, Carol. A new coronavirus variant identified in South Africa has now been found in the U.S. for the first time. South Carolina officials say 2 such cases have been diagnosed in the state. Neither of them are related. Viruses mutate constantly, and many variants of the coronavirus are circulating around the globe now. Scientists are especially worried, though, about the South Africa variant because it seems to spread more easily and may not respond as well to the current vaccines. Republicans are warning against passing one major piece of President Biden's pandemic relief proposal without their support. Bloomberg's Nathan Hager reports.
Texas Republican John Cornyn says it would violate Senate rules to try to pass a $15 minimum wage through budget reconciliation. That's a process that requires only 51 votes rather than the usual 60. Incoming Senate Budget Chairman Bernie Sanders has said he thinks the bill could be written so it would pass with a simple majority. Cornyn says Democrats might be considering the so-called nuclear option, changing Senate rules with 51 votes rather than the 67 that are usually needed. Sanders did not threaten that specifically, but Cornyn says if Democrats try it, it would destroy the Senate as an institution. In Washington, I'm Nathan Hager, Bloomberg Radio.
NASA is remembering the loss of astronaut crews on this day of remembrance. The agency is paying tribute by reading the names of the lives lost.
Michael J. Adams. Robert H. Lawrence, Jr.
February 1st marks the 18th anniversary of the Columbia disaster. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. This is Bloomberg Business Week. Carol Master along with Tim Stenovic. Guess what we're going to talk about?
GameStop?
Tick, 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 tick. You're a winner.
Okay.
So this story by our Olga Karif talks about, in a Reddit post last week, a day trader who helped push GameStop shares at that time to record highs says he stopped by his local GameStop store to hand out $100 bills to employees as a thank you. He encouraged other traders to do the same.
He said, quote, "They are part of the reason we are up so much." He got 442 comments on that post.
Yeah, exactly. But at the same time, let's not forget that we know GameStop as a company. I mean, let's go to the fundamentals, and that's kind of a fundamental argument within this story. It's like the trading, is it on fundamentals or is it just having some trading games?
I would say that it's not on fundamentals, Carol. I mean, I'm no expert, but...
But yeah, I mean, more than 1,000 stores are expected to go dark during their fiscal year, GameStop's fiscal year in January. And listen, the people who are working there, I mean, I kind of cringe a little bit. These guys are making $11 an hour.
Look, and to put that into context, it's lower than at Walmart. It's higher than the federal minimum wage, but we know right now there is a big push for $15 minimum wage. It's something that passed has passed in many states, and it passed in Florida most recently in November.
Yeah.
But yeah, I mean, I think that one part of the story, and I'm so glad that we're highlighting it, is the people who actually work at these establishments and the way that they are not even affected by this run-up in the stock price.
Right, and it goes back to what is the fundamental story? There are workers who are probably going to lose their jobs, safe to say. Mike McKee kind of highlighted it when we talked about weekly jobless, that he's talking about GameStop. He was looking at it from the aspect of this is a company that's not doing well, probably going to, they're going to shut down. A lot of workers are going to be out of work. And at the same time, you have a bunch of investors playing on the name and have made a lot of money.
Yeah, and it really it infuriates some GameStop employees. One user on Reddit called it tone deaf and infuriating to see people from Wall Street Bets celebrate how much money they made on the stock.
Yeah, so as you said, an interesting and important angle that our team has covered. You're listening to Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Stocks higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here's Bill Maloney.
And good afternoon, Charlie. U.S. equities are surging today amid the GameStop insanity. Dow is currently up 437 points. S&P's gained 57. NASDAQ is higher by 152. The U.S. 10-year yield at 1.05%. Gold is little changed, and transports gained 192 points. Among the main 11 S&P sectors, all were in the green, led by the financials and the industrials. And leaders to the upside in the Dow, Disney and Intel, while Apple fell after earnings and led to the downside. Also after earnings, Facebook and Tesla both fell 2%. Visa gained as much as 3.6%. And in other news regarding GameStop, the intraday range today, 112 to 483. Facebook is considering antitrust suit against Apple, and a Senate panel will be holding a hearing on the current state of the stock market. Wrapping things up, some of the names pointing after the bell tonight include Mondelez and Skyworks. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So earlier this week, NASDAQ CEO Adena Friedman participated in the Bloomberg The Year Ahead virtual event, and she was asked about the trading that we've seen this week. She talked about specifically how the NASDAQ handles potential market disruptions from social media. Check it out.
We basically have some tools that track changes in chatter on social media. We think that there's something unusual or, even worse, nefarious going on. We can halt the stock, and then we will contact the company, make sure there's no news.
All right, and that was, again, NASDAQ CEO Adena Friedman. So what they do when there's, social media chatter, which we know, Tim, has been a big part of the run-ups that we've seen in GameStop. There have been conversations going on for weeks. Maybe.
Yeah, there have. I mean, it makes sense given that this is, I guess what's kind of surprising about this whole story, Carol, is this stuff was happening back in the 1990s on message boards, right? The difference is, I think, the apps and the commission-free trading and that you're allowed to do now. But I mean, people have been talking their book since books existed.
Exactly. It happens all the time. So let's get back to Jennifer Schultz. She's Director of Financial Regulation Studies over at the Cato Institute Center for Monetary and Financial Alternatives. She's also a former director in the Department of Enforcement at FINRA, still with us on the phone from Washington, D.C. What do you make of what you just heard from NASDAQ CEO Adena Friedman about how they deal with talk about social media? And Tim's right. I mean, go back to, the dot-com bubble. I mean, people were talking about things. What's different? What's new? What do we need to do?
I agree with Tim. This is not new, so to speak. And I don't fault NASDAQ at all for keeping an eye on social media, particularly where there might be misinformation or insider information that's been leaked. That's great things for the exchanges to be keeping an eye on to see if there is a need to pause trading. Where I walk away a little bit is NASDAQ's statement yesterday that they would have stopped trading here for an extended period of time, kind of at least implicitly supporting some of the 30-day type suspensions of trading that the Secretary of State of Massachusetts, Bill Galvin, was supporting. I think that gets in the way of actual market function. And this type of discussions, trading, talking your book, this is normal.
Yeah.
Even if the outcome here might not look normal at the moment.
Well, that was exactly my next question to you, Jennifer. I mean, are markets functioning normally here? Is this what's supposed to be happening?
I think the answer is yes. I think that there's concern because there's a bubble, but bubbles are a part of our markets.
Right.
Have been a part of markets since their inception. We don't need to talk about tulips to know that.
Right. And the overall market, if you look at it, I mean, today it's not like it's bringing down the overall market. And I do wonder if we are ignoring that, and we shouldn't be.
The fact that the market rose today when it was pulling down a little bit is a sign that something is amiss.
Well, I'm saying that something isn't, that you're seeing, a pretty significant correction in GameStop today, and yet the rest of the market's doing okay. It's actually rallying.
I don't think there's any indication here that we have sort of a contagious event.
Right.
and that there's any sort of larger market instability problem. I think we're functioning correctly.
So
it's just kind of crazy.
So how does this story end? I mean, is this something that we're going to continue to see because Wall Street Bets on Reddit is a thing and there's so much interest around it? Or is this going to be a flash in the pan?
That's an interesting question, and I think some of that's going to play out in how badly some of these individual investors get hurt when the stock comes down. And I think the stock is going to come down. I don't think that's a controversial position, and I think that individuals are going to lose money here. Is not a controversial position. To the extent that people really get burned, I think we might see less excitement for jumping into another bubble in the future. But at the same time, I think people are having fun here. Either fun just for fun's sake or fun to stick it to Wall Street. And I wouldn't be surprised if we see more of this, at least in the short term.
It's interesting because I do feel like that there's a lot of big trading houses and firms and investment firms who often talk about, you know what, we need to, figure out ways for alternative investments, for it to be much more accessible to kind of the little guy and retail investors. So there is that argument on one hand, but as soon as kind of retail investors figure out how to, I guess, game the market, but it doesn't look like they're breaking the law, everybody kind of gets upset.
And I would point out that hypocrisy. I'm pretty solidly in favor of giving retail investors the opportunity, both in the alternative investments front and here. We need to make sure people are educated and understand the risks of the markets that they're playing in, and those risks are real. But giving them the opportunity to try, I think we should be permitting that on all fronts.
Yeah, I got to say, I'm just looking at the amount of the questions and things that are coming in on my Twitter feed because this is really resonating with a lot of people, Tim.
Yeah, it is. And look, I think there's a big part of this story is about the little guy versus, the big guys and them like sticking it to the man and sticking it to those hedge funds.
Well, somebody tweets me, so should we have a law that bans people from going to Vegas so we can protect them from losing money? Like, it's just...
Yeah.
I know you're looking at me.
No, I mean, I don't know the answer. This is like uncharted territory in some ways.
Yeah, exactly. Jennifer, thank you so much. Really, really enjoyed that. Jennifer Schulp, she's Director of Financial Regulation Studies over at the Cato Institute Center for Monetary and Financial Alternatives. She was a director at the former director in the Department of Enforcement at FINRA. Listen, there's going to be lots of conversations about this to come. So stay tuned, everybody. Buckle in because there's a lot more to come. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
It is Bloomberg Business Week. Carol Masser, along with Tim Stanovic in our Interactive Broker studio. Coming up, we're going to get the chart of the day, and God bless Dave, because it's going to kind of tie up some of what's going on.
And the song of the day.
And the song of the day, which I can't wait to see what he does. Stick around for that. Let's get back to, though, the trading day and Charlie Pellet. Hey, Charlie.
And let's begin with a headline from the Bloomberg professional service. Robinhood has told users it may close some, quote, at-risk positions, checking some of the high-flying names in recent days. It is a down day for GameStop, dropping 34%. Shares of AMC Entertainment down now by 51.4%. Stocks higher, well off session highs, though, with the S&P now up by 56. That is a gain of 1.5%. The Dow is up 436, up 1.4%. NASDAQ up 141, higher by 1.1%. 10-year yield down 10-30 seconds, the 10 years down 10-30 seconds. 10-year yield 1.05%. Gold is down 0.1%, down $2.50 the ounce at $18.41. West Texas Intermediate crude down 1%, $52.33 a barrel. Again, that 10-year yielding 1.05%. So we are looking at an update with equities mounting a comeback from their worst loss since October, as moves to limit retail trader speculation in some companies opens the door for hedge funds to load up on the stocks that they had been ditching. World Bank chief economist Carmen Reinhart says global growth this year could be less than half of the bank's 4% estimate if vaccine distribution doesn't move quickly. Reinhart was interviewed at the Bloomberg Year Ahead Virtual Summit. And as for those ongoing concerns about the rollout of vaccines, Dr. Jason Farley is a nursing professor at Johns Hopkins Bloomberg School of Public Health.
In terms of who wants to get vaccinated, we're already seeing disparities emerge. We will see, our hardest hit communities are people of color, so black and brown people, but yet we're seeing that the majority of vaccines are going to Caucasians or white people. So we're really seeing this disparity that has emerged, and that's driven in multitudes by both the access points to the vaccine, as well as the cadre of people who've been determined to receive the vaccine.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine names that we follow: Pfizer up 0.4%, BioNTech up 3.8%, AstraZeneca, the ADR is up 0.3%, Moderna's up 2.6%, Johnson & Johnson up by 1%. Recapping, S&P up 50, up 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg. I like it.
Supertramp.
Take the long way home. Supertramp?
Yep. Nice stuff. Good, Dave. And I know you're going to...
Take the long way home.
Take the long way home. Because you're going to tie this back to GameStop, aren't you?
Among others.
Okay, so what do you got for us? What's the chart?
Think about what long means in the context of the markets. I mean, if you own something, you're long it. At least that's the way people talk about it. And certainly, we've kind of seen what happens when the short sellers' favorites become long, you might say, especially with GameStop, but certainly not exclusively. And what's striking about what we saw before today's clear retreat is how pervasive it's been. Now, I had a chart out the other day on the sort of the broad brush of what was going on with the most shorted stocks. But what I did this time around is kind of focus in on the companies that had the highest percentage of their shares borrowed and sold. They call that short interest, relative to the shares available for trading, also known as the float. So there were 15 stocks besides GameStop in the Russell 3000 index that had at least 40% of their float sold short. So in other words, they were real short-selling favorites. And, when I looked at their January performance yesterday, before things started falling out of bed, they were up by an average of 70%, 7-0, at a time when the Russell 3000 itself was barely higher. I mean, it just goes to show you how outsized the moves have been across the board. Now, we've had so much focus on GameStop, and I suppose you could throw a company like Bed Bath & Beyond into that mix, which does show up on the chart. But we haven't talked a lot about, companies like the real estate investment trust Macerich or Accelerate Diagnostics. I mean, you mentioned Tootsie Roll earlier, Tim, and this shows up on the chart for just that reason. But, we've seen it in a whole lot. National Beverage, the maker of LaCroix sparkling water. So, it's been so pervasive, and the chart really illustrates that.
Yeah, the chart does illustrate that. And my question is are these, I mean, some of them have been, right? Bed Bath & Beyond, we've seen that. We've seen National Beverage. We've seen Tootsie Roll, as you mentioned. But some of these we haven't seen nearly any of the action that we saw with GameStop. Does this mean that we could start to see that because they're most favored by short sellers?
Well, I mean, given the turnaround we saw today, I mean, it's kind of hard to draw that conclusion. What you can say, though, is that even though they haven't had the really spectacular moves that you saw in the likes of GameStop, they've certainly been following the trend. And so you've got something broader going on, which was a point I was making the other day, than, just a few stocks that the people who post on Reddit are favoring at this point. And if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So, Dave, you've seen a lot of market cycles. You remember the tech boom back, in 2000. And, Tim was bringing up the point that it's not the first time that there have been platforms where people are talking about stocks, and then you see some dramatic moves. So this isn't new, but what do you make of what we've been seeing as of late, and how do you kind of put it into perspective?
Well, you're right. It isn't new. I mean, back in the 90s, you had Silicon Investor, Raging Bull. You had message boards on Yahoo, which kind of filled the same function as Reddit does today. Also, StockTwits, another place where traders gather. I mean, the difference this time around is just how much easier it is for individual investors to trade. The whole idea of commission-free stock trading, commission-free option trading, you didn't have that back then. So it just made things a whole lot easier in terms of investors, smaller ones, being able to get together and move the markets.
A lot of cheap money around, too. I mean,
that's true as well. It's certainly a whole lot cheaper than it was 20 plus years ago.
And maybe more people sitting at home, not necessarily working or, not being able to do other things.
Right. Creates this incredible momentum, right, Dave?
Absolutely. I mean, put it all together, and we've seen the results in the past few weeks, and we see things kind of unwinding a bit today.
Yeah, exactly. All right, Dave, thank you so much. Dave's going to be back a little bit later on with his stock of the day. Right now, though, back to world and national news. Back to Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, a more transmissible variant of the coronavirus that was identified in South Africa has now been detected for the first time on U.S. soil. 2 cases have turned up in South Carolina. Neither of them had a history of travel or any connection to one another. South Carolina Public Health Director Dr. Brandon Traxler says they are studying these cases to determine the risks.
We do not have concern at this time based on their contact tracing about there being the potential for any mass widespread transmission.
Federal health officials have said the South Africa variant in particular could pose a challenge because the current vaccines are not as effective on it, though they do provide some protection. Security officials on Capitol Hill are outlining plans to improve protection of members of Congress who have increasingly been receiving death threats amid warnings on domestic terrorism.
Speaker Nancy Pelosi and the Republican leader received a letter from 30-plus members asking for enhanced security.
We have members of Congress who want to bring guns on the floor and have threatened violence on other members of Congress. We are going to approach it in a way that will truly protect them in terms of their service here, their service home, their transportation in between.
The Speaker denounced the Republican leadership for appointing a new member, Marjorie Taylor Greene, to the Education Committee, after Green suggested that mass shootings in public schools may have been staged by supporters of gun control. In Washington, Irv Chapman, Bloomberg Radio.
A liquid nitrogen leak at a Northeast Georgia poultry plant has killed 6 people, with multiple others being taken to the hospital. The cause has not been determined. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. So a couple of stories, and we're going to stay on this GameStop story, or Reddit chaos, or Reddit revolution. There's a lot of hashtags we could probably create here. You mentioned it. Our news team has been mentioning it. Representative Alexandria Ocasio-Cortez, AOC, assailing the trading curbs imposed on GameStop by Robinhood and other platforms, saying the restrictions on high-flying stocks demand closer scrutiny from U.S. regulators and Congress. And I do want to mention, we did have a headline cross the Bloomberg about Robinhood saying it told users it may close some quote unquote at-risk positions.
Okay, so to catch people up who haven't been glued to Twitter, here's what Ocasio-Cortez, AOC, here's what she said, quote, "This is unacceptable. We now need to know more about Robinhood's decision to block retail investors from purchasing stock while hedge funds are freely able to trade the stock as they see fit." And in the time that she wrote that tweet, we got news that the Senate will have a hearing on the current state of the stock market.
Right, exactly. So there's all of a sudden everybody's like focusing on it. At the same time, we have another story on the Bloomberg. BlackRock, Morgan Stanley executives ridiculing the Reddit chaos. BlackRock Vice Chairman calling the phenomenon irrational nonsense, while Morgan Stanley CEO James Gorman said that those involved are in for a, quote, rude awakening. Well, if that's the case, then back away, everybody, and let the free markets go, right?
Right.
And you're going to win some, and there's going to some people who sold and made a lot of money, and then there's some people who are going to continue to ride the trade, and then obviously are getting hit in the down slot.
Well, it's kind of what we heard from our previous guest, Jennifer Schulp, from the Cato Institute, who said that, people, yes, some people are going to lose money, but that's the way that the free market works.
Right, exactly. I mean, we all lost money, last year in the equity markets playing index funds that are considered to be, what a lot of people are investing in.
And hedge funds lost money yesterday.
Yeah, exactly. Listen, this is a huge debate, and I think there are going to continue to be more conversations. But obviously, with all this attention, maybe we do all have to take kind of a closer look at it, see what it all means.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, repeating an earlier headline. Robinhood Markets has told users of its popular stock trading app it may close out some of their positions as part of measures it's taking to reduce account risks. It is an up day on Wall Street, 13 minutes to go ahead of the closing bell. Equities mounting a comeback from their worst loss since October as moves to limit retail trader speculation in some companies opens the door for hedge funds to load up on the stocks that they have been ditching. Here's where we stand. S&P up 46 now, well off session highs, up 1.2%. The Dow up 385, up 1.3%. NASDAQ up 99, up by 0.8%. 10-year down 11.30 seconds. 10-year yield 1.05%. Gold down 0.1%. West Texas Intermediate crude down 1.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet.
All right, Charlie, thank you so much. So we want to get to the big story of the day and really the week, and it's already going to be, as we said earlier, a story of the year. Let's get right to Interactive Brokers chairman and founder, Thomas Petterfy. He is on the phone in Connecticut. Interactive Brokers, among the platforms that did start restricting trading of stocks that have run up rapidly, including GameStop. They did that earlier today. Thomas, good to have you here with Tim and myself. First of all, why did you stop the trades? What was the nail in the coffin that made you ultimately decide to do it? And I'm curious if you were getting calls from either clients, investors, or even your board that you had to do something.
So first of all, I'm in sunny Palm Beach.
Oh,
Thank
okay.
you.
Okay. Sorry.
Wish
I
we
was
were
told
there.
Connecticut. I wish I was there too.
Thank you for inviting me onto the show.
Yes.
The answer is yes. So this stock today, GameE, it was at one point as low as $112 and one point as high as $483. Currently, it is trading at $234. So why did we resort to these measures? We did because we are extremely concerned about the continuing viability of intermediaries, the clearinghouses, and the brokers. Now, why is that? Because on every option contract, there is a buyer and a seller. So a number for each option contract that exists in the world, there is a loser and a winner. The broker and the clearinghouse stands between the winners and the losers. The broker has to collect from the losers, give it to the clearinghouse gives it to the winner's broker and gives it to winner's broker gives it to the winner. The problem arises when the loser loses more money than is in his or her account.
Mm-hmm.
Right? Now, there are currently 3 million options contracts outstanding on GameE. The average option contract, since stock has moved around so much, I estimate the average option contract is worth about $10,000. So on 3 million contracts, half of them are worthless, half of them are worth on the average of $10,000. That's $15 billion of winners and losers. Right? So now the brokers have to collect from the losers and pay it to the winners. If they can't, they have to put up their own money. Right?
Right.
So luckily enough, we have a very large capital base of $9 billion, and we have automated liquidation systems, but many of other brokers do not have that.
But Thomas, if I can break in, and we should point out that Interactive Brokers is a sponsor of Bloomberg Radio and Bloomberg TV. So it's not the case that traders were doing anything wrong or illegal. It's just a case of logistically there were going to be problems, right, in terms of clearinghouses. So that's more an operational problem versus a market problem or traders doing something wrong, correct?
No, not correct. So short squeezes are illegal. Now, when you buy a stock for $300 that a month ago was worth a failing company, right? Basically a a second-hand store for video games, right? So it wasn't really worth any much money. And it's not trading at $230, right? So your only motivation to buy that stock, which you know full well eventually will go down to $17, is that, I'm sorry, there is, I don't know what's happening.
That's okay. We're all getting a lot of Skype calls at home when working from home these days.
Yeah, right.
So you go ahead. Go ahead. I want you to finish that thought.
If I may continue.
Please.
So your only motivation to buy this stock at $230 could be to join the short squeeze. Because why would this stock go up? Why is it worth $230? It's worth, under $20.
Right. Are you guys closing out accounts? Are you closing out positions? We learned just minutes ago that Robinhood has told users that it may close some at-risk positions. Thomas, I don't know if you can hear us.
Yeah, I can hear you now. I just didn't hear you before. That at-risk positions, what did you mean?
Yeah, are you closing out any accounts? We did know that Robinhood says that it told users that it may close some at-risk positions.
We have closed thousands of positions. We have 20, as of yesterday morning, we had 27,000 customers who were involved in GME stock, either via the stock or via options. Many of them, of course.
Yeah.
Many of them, especially since we tend to have professional customers, they tend to be on the short side. So yes, we closed out many of those positions.
And was a lot of the positions that you closed out? I mean, I'm curious about, in terms of your business, how much is retail investors, individual investors versus bigger institutional clients?
So, well, it's hard to tell. Our average client account is just under $300,000. So they are not your regular mom and pop clients. But of course, many of them are smaller and many of them are much bigger. But 300,000 is just the average. We have 1.18 million customers. So
yeah. Hey, Thomas, it's hard, and I think we're trying to get our head about. I have lots of conversations with, big name shops too, and investors who say, we're increasingly trying to open up alternative investments to individual investors, give them access to the types of investments that the bigger institutional clients typically have. And yet I feel like when a smaller retail investor to some extent acts like one of the big guys, all of a sudden their hand gets slapped.
So I don't think that's true. So short squeezes are not legal. Now, maybe many of the longs here do not know that they are participating in a short squeeze. But that's the only issue I see, that they inadvertently doing something that they shouldn't be doing. But it's really stupid to look at a stock and buy it at $300, and you know that it's a little business, right? It's a corner store.
Thomas, we only have 15 seconds for this, but are you worried that there's going to be a PR impact from this and retailer traders will go to other trading platforms?
I don't think so, because our professional customer understands that we have to protect the marketplace for their sake, and their money we have to protect.
Do you think regulators, just quickly, 20 seconds, have to get involved from Congress and others?
I think unless regulators come out and say that trading should be in these stocks for liquidation only, this is going to continue indefinitely, and that's not good.
Thomas, I know it's been a busy day, and we really appreciate you finding some time for us. Interactive Brokers Chairman and Founder Thomas Peterffy joining us on the phone. Interactive Brokers, a sponsor of Bloomberg Radio and Bloomberg TV. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange. Folks from Renaissance Capital virtually ringing that closing bell as we await the latest numbers out of Visa. Stocks finished well off session highs. Green on the screen, an up day though. But interestingly, the Dow Jones Industrial Average remains lower year to date, barely for the year, down by 0.01%. Right to today's numbers. I'll give you the why in a moment here. The Dow up 300 points, higher by 1% today. Bottom line, well off session highs. S&P up 36, up by 1%. NASDAQ up 66 for the NASDAQ Composite Index, up by 0.5%. NASDAQ 100 Index higher today by 0.7%. Equities mounted a comeback from their worst loss since October as moved to limit real estate retail traders' speculation in some companies opened the door for hedge funds to load up on stocks that they have been ditching. Today we saw shares of GameStop down 44%, AMC Entertainment down 56%. However, some of the airline stocks, specifically American Airlines, up today by 9.3%. It was an up day on Wall Street today. As for market speculation and some of those high flyers, now low flyers, Liz Ann Saunders is Chief Investment Strategist at Charles Schwab. She says you got to keep it all in perspective.
In a lot of ways, this isn't all that different from what we've seen in past periods where we've had speculative fervor that kind of goes into overdrive. Obviously, the players are different, the mechanics are different, the types of stocks are different.
MasterCard and Comcast beat earnings estimates today. MasterCard up by 2.8%. Comcast shares advanced 6.8%. After earnings, Apple was down 3.5%. Tesla slumped 3.3%. Facebook shares down by 2.6%. Again, recapping, it was an up day on Wall Street. Stocks finished well off session highs. S&P up 36, a gain of just about 1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Wild thing, think you move me.
I got a few moves I know you'll like.
Shaking all over.
Bloomberg Business Week. Movers and shakers.
Shaking, not stirring.
On Bloomberg Radio.
All right, let's take a little bit of a look into the markets. Carol Master along with Tim Stanovic. We both just were like, I'm exhausted.
That was like a sigh of relief at the market close just now.
It's done.
You're like,
but there's after hours that
I
don't
know.
forget.
And they're off to the races.
Exactly. Charlie Pellet breaking down, Tim, the numbers. We definitely finished off our highs of this session, but nonetheless gains across the board. S&P 500, definitely a risk-on trade, more so. 362 names in the index, higher today, 142. You're looking at the industry groups.
Yeah, I'm seeing a lot of green on the screen. Financials leading the pack, up 1.92%. Worst performing, the laggards. Real estate, still up 0.3%.
Yeah, interesting. All right, so let's bring in Bloomberg News cross-asset reporter Sarah Ponzak, who I have to say her reporting on GameStop and kind of our big story of the week, she has just been spot on. Sarah, come on in on the trade today. Where do you want to go?
Thank you. Well, just like you guys, I'm very glad that the market has closed
right?
today.
Exhausted.
Many of us probably feel we can let out a sigh of relief. It's been exhausting. It's hard to know where to look. But today we saw the complete reversal of what we saw yesterday. Or not the complete reversal, because still it hasn't completely reversed what we saw yesterday, but you saw the opposite. So, for example, today, if you look at the Goldman Sachs basket of your most shorted stocks, so is an equally weighted basket, the 50 most shorted stocks in the Russell 3000 are down 7.7% today after a gain of 9% yesterday. Meanwhile, on the flip side of that, if you look at an ETF that trades under the ticker GVIP, so it essentially tracks popular long hedge fund positions, today it was higher by 3.2%, so well outpacing the market, whereas the S&P 500 was up 1%. So we saw a bounce back in the broader market today, but really many of these names that we have been talking about all week long coming under pressure, unbelievable volatility. And you look at AMC today, down 56%. If I pull up GameStop, for example, down 36% after falling 70% or so at a time. Multiple volatility halts throughout the day. And it's also after shares of GameStop traded above $500 a share earlier this morning in the pre-market trade, whereas they closed at $215 a share. So the volatility that we are seeing just continues.
Well, and I just want to point out the VIX down 20% today. We were up 61% yesterday, closing at 37, closing at just below 30 today. So, you know, it's exactly what you're talking about, Sarah, a ton of volatility that we're seeing. But I am more interested, I'm interested in GameStop, no doubt about it, but I am interested in kind of the underlying fundamentals of our trade and what is it that's really, you know, investors trading on? Is it the virus? Is it concern about earnings? Is it a concern about the economic outlook? What is it?
You know, I'll be honest, it's very hard to tell. Okay. And especially in our business, it's very tempting to want to pinpoint what the market does on whatever it may be. And yes, absolutely, investors that we speak with are still talking about the vaccine rollout. They're still talking about the efficacy rates. They're still talking about the prospects for stimulus down the line on the fiscal side. But at the same time, what we've seen lately has really just dominated the story. And I'll give you a sense of the type of volume that we're still seeing in markets today. Whereas, and I'm talking on the option side of the trades. If you look at call option volume, yesterday was an all-time record, almost 38 million call options traded. Today, we still saw 32 million call options traded, so betting that stocks will go higher. And that looks to me like that is the third highest on record. So we're still seeing remarkable numbers and remarkable volume, particularly in the option market, too.
Okay, so let's end with a little bit more GameStop, because I can't get enough of it. It closed down 44%, the first decline in 6 days, Sarah. Is the story starting to end?
Wiping out $10.7 billion in market value.
Details, Carol.
Look, we don't know the straight-up answer to that yet, but if there's anything we've learned the past couple of days, it's that the crowd that has been very involved in trading GameStop and AMC, they're a vocal crowd. They're not going to go away quickly or quietly. We know there are lawsuits against Robinhood right now. Robinhood has also told its users that it may be closing some at-risk positions and some options that were supposed to expire tomorrow. They're going to be set to closing transactions only. That's for GameStop and AMC. So I don't know if you were hoping that my answer, Tim, would be that this is coming to an end and we're all going to be able to sleep soundly this weekend, but I'm not sure that's the case.
Yeah, I'm actually very concerned for you being able to get some rest, because you've been doing...
She doesn't sleep. We're convinced because she's so prolific.
I know. I was like, I kind of feel bad. I was sort of like, oh, I'm breathing a sigh of relief. I mean, Ponsac must be exhausted.
I've had a lot of coffee today.
All right, good.
Good stuff, good stuff. All right, Sarah, thank you so much. Really appreciate it. I just want to mention Visa's out. The stock's up about 1.6% in the after hours, also announcing an $8 billion buyback, beating top and bottom lines. Mondelez also out, and they are seeing their 2021 adjusted EPS growth at high single digit, and that stock's up about 1% in the after hours, so a little bit of earnings flow. This is Bloomberg.
All right, Dave, you're up. Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson!
It's Dave. It's Dave Wilson. Okay, Dave, your stock of the day. What's it going to be?
Extreme Networks for an extreme day, Tim. You know, the company's a provider of computer networking equipment and software. Company was founded in 1996, went public in 1999. The ticker, logically enough, EXTR. The shares more than tripled within the first 2 years of trading, then plunged as much as 96%. Extreme has never come close to recouping the loss, yet the shares did move in that direction after the release of fiscal second quarter results late yesterday. Extreme's earnings and revenue beat analyst average estimates in a Bloomberg survey. So did its forecast for the third quarter. Now, Extreme called the latest results preliminary because of an unresolved accounting issue. Even so, they sent the shares up as much as 21% to their highest price since June 2018. They closed with a gain of 12%.
All right, good stuff. Dave Wilson, thank you so much with his stock of the day. You're going to leave me.
I am, but I will be with you in spirit, and I will be listening on my way home.
Not the same, not the same. What a day, and we'll see what happens tomorrow. I'm assuming that the headlines on GameStop will continue. We'll continue to see what happens in terms of the trade. That'll be interesting to watch.
Yeah, never a dull moment. I'm excited.
All right, have a good night.
Thanks. See you tomorrow.
All right, let's get back to world and national news. Over to Nancy Lyons we go in D.C. Hey, Nancy.
Hey, Carol. President Biden signed more executive orders today, this time to make it easier for Americans to buy health insurance insurance during the pandemic. He's reopening the federal Obamacare marketplace. But he is receiving some flack for signing more than 24 executive orders in his first days in office. White House Press Secretary Jen Psaki was asked about his plans for introducing legislation.
There are a lot of steps he's taken over the past couple of weeks. He's not going to delay actions that require immediate action, that he can bring that relief immediately, but he's also going to work with Congress. He's proposed multiple bills to do that.
Of course, one of those bills is his COVID relief package to provide additional financial help in the midst of the pandemic. Today, House Speaker Nancy Pelosi said Democrats are prepared to fast-track the nearly $2 trillion stimulus package without the support of Republicans.
We want it to be bipartisan always, but we can't surrender if they're not going to be doing that. Instead, we will pass it.
Some Republican lawmakers are balking at the price tag. At least 6 people are dead after a hazmat situation this morning at a poultry plant in Gainesville, Georgia, just northeast of Atlanta. Officials say a liquid nitrogen leak occurred. The cause of the leak, though, is unknown. Pakistan's Supreme Court has ordered the release of 4 Islamists who were convicted of beheading American journalist Daniel Pearl. He was working at the Wall Street Journal's South Asia bureau chief in 2002 when he was abducted and beheaded. The court says the 4 men should go free after upholding a ruling acquitting them. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nancy, really appreciate that. Do want to bring you this headline, Novavax, COVID vaccine, 60% effective in most South Africans. So again, we know lots of drug companies around the globe continuing their pursuit of a vaccine and obviously going through trials. So again, the Novavax COVID vaccine, 60% effective in most South Africans. That is a much lower efficacy rate than we've seen from the Moderna and Pfizer vaccines, but nonetheless important. Charlie Pellet with me, and we're going to go to a Dow Jones story that talks about attempts to break into ATMs and steal cash more than doubled in the U.S. last year, Charlie, as some criminals took advantage of civil unrest in cities and others targeted the larger than usual amounts of cash stocked in machines when banks were closed during the coronavirus pandemic. I don't know about you guys at your house. My husband and I have talked about, I don't remember the last time I went to a cash machine.
I totally agree with you. I mean, I'm putting everything on credit cards, and part of the reason being is that the deals have gotten so good to put stuff on plastic because nobody's traveling or flying, but that is a separate topic altogether. Reminds me of the old Willie Sutton bank robber quote, why do you rob banks? Because that's where the money is. And you know, a lot of these ATMs, I saw a robbery like that in my neighborhood not so long ago, where somebody broke into a diner that happened to have one of those ATMs sitting there in a horrible place right behind a glass door. The restaurant was closed overnight. Somebody smashed the glass and made off with the ATM machine. So this story rang very close to home.
Well, and what's interesting, too, if you want to have an idea, 3SI Security Systems, it's a company that provides security technology for banks and credit unions. They say while many theft attempts fail, successes yield $83,000 on average, according to their findings. Police have recovered about 80% of the money stolen from ATMs equipped with the company's technology. Again, this is coming from 3SI. But yeah, listen.
Give me a number very briefly. How much money do you think is in one of the smaller ATMs? I'll tell you. 20 grand, according to our friends at Dow Jones.
That's it?
Yeah, that's why I mentioned it.
I mean, forgive me.
That's where the money is.
Yeah. Oh, my God. That's really interesting. All right, Charlie, thank you so much. Really appreciate it. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a developing story and a headline from the Bloomberg Professional Service. Robinhood says it will allow limited buying of some securities tomorrow. Moments ago, we heard from Visa. Shares up by 3% after hours. Visa reported earnings per share for the first quarter that beat the average analyst estimate. It was an up day on Wall Street with the Dow, the S&P, and NASDAQ all advancing as that day trader frenzy eased. S&P 500 index today did advance by 36 points, up by 1%. The Dow up 300 at the close, again well off session highs, up by 1%. NASDAQ up 66, up by 0.5%. 10-year down 9/30 seconds, 10-year yield 1.04%. Gold down 93 cents the ounce at $18.43. West Texas Intermediate crude down 1.1%, $52.26 a barrel. GameStop down today by 44%. AMC Entertainment plunged 56.6%. Again, a Visa beat. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Love Vis-a-Vis. All right, Charlie Pellet, thank you so much. So this story definitely caught our attention. It's among the most read on the Bloomberg. It's a Bloomberg exclusive about how, for once, Main Street is beating Wall Street. And yes, this has to do with the frenzied trading in GameStop and other names and how it's really upending the trading for some big hedge fund investors. Let's get into that angle of the story. Hema Parmar is hedge fund reporter at Bloomberg News. She is with us on the phone in New York City. Hema, so good to have you here with us. This is a great story, and kudos to you guys for reporting it out. So it is kind of big guys versus little guys, Main Street versus Wall Street. Tell us what you guys found out in your reporting.
Yes, so thank you. It's really the only thing anyone's talking about these days.
Yeah.
And this Main Street takes on Wall Street, perspective. We cover hedge funds here, so looking at it from the hedge fund reporting side, we were managed to get a sense of how some of these funds were performing. Some of the titans of the industry that had produced really good gains through last year after the tumult of 2020. January has been obviously incredibly difficult as the frenzied trading around GameStop and other stocks like AMC have been, really driven up. These are stocks that hedge funds are very commonly shorting. So 0.72, for example, they're down about 10 to 15% so far this month.
That's Steve Cohen's firm, right? Steve Cohen's firm.
It's Steve Cohen's firm, and they have a stake in Melvin Capital, and Melvin Capital had lost 30% through Friday, potentially more than that since then, and that's the fund that's really has been, hit the most and has been, some say targeted specifically in the retail investing frenzy to drive up this one stock. Other firms also impacted. D1 Capital, they're down about 20%. Jack Woodruff's Candlefoot Capital, which is a bit smaller, they're down about 10 to 15%. And Maple Lane, they lost about 33% too, in part of a short position on GameStop. So it's been certainly tumultuous. We're curious to get a sense of how things are looking through today, given GameStop has fallen a great deal. Some of these funds may have seen some repair, but still, it may not compare to.
I have to say, Steve Cohen, he's out there tweeting a lot, and it's really kind of interesting. And I guess late on Tuesday, he's been tweeting a lot. Of course, he owns the Mets now, and he tweets a lot about that. But apparently on, late Tuesday, he tweeted, "Hey, stock jockeys, keep bringing it." He put that out on social media. But it's interesting. I mean, these guys, these smart, savvy, big institutional investors who often do take, different sides of a bet or short, significant short positions. I mean, there is a direct correlation. They're being hurt by these trades.
Yes, he's definitely been more vocal on Twitter these days. And I think part of the conversation people are having is, what does this mean for short selling now, for holding short positions? Is this a new factor that short sellers or hedge funds that have short positions will need to consider, the Reddit factor, to examine who the shareholders are in some of the stocks that they short? Even if they look at it, they may not be able to gauge because the retail investors may not be in them yet. But it's this really interesting conversation that's being had right now about, okay, like, is this something that's here to stay, or is it a blip, an occurrence that we're seeing now because of the pandemic? People are home, they have stimulus checks, they've got nothing to do, and maybe they've got more disposable income and no entertainment. So it's certainly a phenomenon. No one's really seen anything like it before. So it definitely has everybody in a bit of a frenzy.
Yeah, it's interesting. And so what are you hearing in terms of even more broadly around the hedge fund industry? Are we likely to see other hedge fund houses come out and say, yep, we also had an impact, or we're going to see, some impacts to or some trading hits in terms of returns also because of this?
I think it's yet to be seen, and I'm sure there are other funds that have been impacted from this. We try to report on it as many as we can, but I'm sure there's more out there too. And I think as the month comes to a close, a lot of these funds are going to have to inform their investors of their full month performances. And so it will be really interesting to get a sense of what the chatter is there. What's interesting is that, what we've seen lately is hedge funds have taken money out of the market on yesterday, at the fastest pace since Goldman's prime brokerage began tracking the data in 2008. So what funds are doing is they have to sell their longs sometimes to cover their shorts in a situation like this. So they lose money on the short side, they lose money on the long side, and so they have this negative alpha they have to deal with. And it's, we're seeing more of the trading at the fastest pace than we really have before.
Well, and that's where, overall investors may care, because that might help explain some of what we saw in terms of yesterday's selling. And even today, we had a pretty decent rally that was holding onto its own, but ultimately it ran out of steam and pared back its gains, I would say by, almost by half. Melvin Capital, just quickly, 30 seconds. They actually had to take a cash infusion, correct? One of the hedge funds?
Yes, they got a cash infusion from Citadel and from Point72 at about $2.75 billion, I believe.
All right, so a little bit of shoring up to do. I don't know, Hema, it's really fascinating to see this and this kind of battle between the big and the little guys. Hema, thank you so much. Really appreciate it. Hema Parmar, she's hedge fund reporter at Bloomberg News, joining us on the phone from New York City. As I mentioned, this is among our most read stories on the Bloomberg, and it is a Bloomberg exclusive, really taking a look at some of the hedge funds and the impact that they had as a result of the volatility, the run-up, and then the selling that we saw in GameStop and a couple of other names. All right, coming up, we're going to switch gears, talk a little bit about the commercial real estate world, because that has certainly been an area that's been impacted by the pandemic, but we're still trying to figure out what the long-term effects will be. We'll get to that in just a moment, right here on Bloomberg.
Broadcasting live to New York, Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 1061. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yeah, so a day doesn't go by where there's a bunch of stories about real estate, the impact of the pandemic, and what it might look like on the other side of COVID-19. We're going to get into it with the U.S. President and CEO of Colliers International. We'll get to that in just a moment. In the meantime, back to the markets and some of the news after the close. Here is Charlie Pellet.
And hello there, Carol Master. Got to begin with Visa. Reported EPS for the first quarter that it beat the average analyst estimate, also adding $8 billion to its share buyback program. Visa shares are up after ours. Visa up now by roughly 3%. Robinhood says it will allow limited buying of some securities tomorrow. That word after Robinhood earlier today told users of its popular stock trading app that it may close out some of their positions as part of measures it is taking to reduce account risks. Thomas Petterfy is the billionaire chairman of Interactive Brokers Group, and his firm has imposed restrictions on trading of certain stocks and options to protect the integrity of the markets. He was interviewed right here on Bloomberg Business Week.
Short squeezes are not legal. Now, maybe many of the longs here do not know that they are participating in a short squeeze. That's the only issue I see, that they inadvertently doing something that they shouldn't be doing. But it's really stupid to look at a stock and buy it at $300, and you know that it's a little business, right? It's a corner store.
Interactive Brokers is a sponsor of Bloomberg Radio and Television. It was an update on Wall Street today. Equities mounting a comeback from their worst loss since October as moves to limit retail traders' speculation in some companies open the door for hedge funds to load up on stocks that they have been ditching. S&P 500 index up today by 36 points, higher by 1%. The Dow advanced 300 at the close, well off session highs, up by 1%. NASDAQ up 66 for NASDAQ. That was a gain of 0.5%. 10-year down 9/32, 10-year yield 1.04%. Gold down 0.1%, 18.42 the ounce, and West Texas Intermediate crude down 1.1%, 52.23 a barrel. Recapping, Visa beats estimates, shares up by 3.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, U.S. new home sales, we talked about this with Mike McKee, rising in December for the first time in 5 months. It's capping the best year since 2006, signaling that record low mortgage rates continue to drive demand for a sector that's really been a bright spot in the U.S. economy. Saw another story on the Bloomberg about Hamptons. Home sales are at a record in the fourth quarter. People continuing to leave New York City, head out to the Hamptons. Meantime, even as the pack of Chapter 11 filings in commercial real estate have slowed amid easy access to funds, some are still telling us that the real estate industry is, quote, facing an existential crisis of what's next. So let's see what Gil Barak has to say. He is the U.S. President and CEO of Colliers International. He is with us on the phone from Los Angeles. Gil, so nice to have you here. How are you, and how is your world, and how does it compare from kind of what we saw over the last year?
Hi, Carol. Nice to talk with you again.
Yeah.
Look, I think we're doing fine. It's been a long year for all of us, or a long 11 months. And I think that, sort of where we are, we're closer to the end than the beginning. That's the good news, right? The vaccines are rolling slowly, but they're rolling. And I think that most people are quite encouraged by that, and encouraged about the fact that we should be returning to some sense of normalcy by the middle of the year and into the back half of the year. And so things are looking up, and they didn't end as badly as some might have predicted sort of when the crisis hit us in March and April last year. There was activity, and there was some sense of optimism, again, toward the end of last year. Clearly, we didn't perform last year. A couple weeks ago on the mall, and before, but things did gradually start to get better, and that trend seems to be continuing.
Is that true around the world? I mean, I know you focus on U.S. properties, but you guys are international. Is it kind of the same story everywhere, or it depends on the market? I mean, I know real estate is location, 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 and it's a very local story, but I'm just curious.
Yeah, no, to everything I've heard and read from my colleagues, across the ponds, is that they're feeling sort of generally the same way. There is enthusiasm, activity is picking up. There are pockets, obviously, there are things within the industry, things like industrial, which I think is fairly common now that anybody that follows the space. Industrial real estate is having, COVID's been a silver lining for them, right? It's been because of e-commerce, and you see this globally, the demand for that type of real estate has really been the opposite of most other asset types because of the e-commerce growth.
Are you seeing any bankruptcies with any of your properties? Because I'm trying to get my head around that, because I think that was the story we thought was coming in 2020, and expectations as restaurants shut down, as retail shut down. And I'm just curious, are you guys facing some bankruptcies with any of your properties, or are you seeing any of that?
It's really de minimis. There was a lot of talk, and this is not dissimilar to 2008, 2009. The distressed debt is coming. The special servicing needs are coming, and it's going to be a wave, and that wave didn't happen. Yes, there are properties that are distressed. There are problematic situations. They are higher than what they normally are in normal times. But it hasn't been, at least from what we've seen, it hasn't been a huge wave yet. I don't know what the next few months hold as stimulus checks are coming out again, but if we don't see some improvement in terms of stimulus and in terms of the crisis receding through vaccination, then the longer it goes on, the harder it is going to be for people to keep going. But so far, it's been manageable. Easy for me to say, right? if I haven't been directly impacted.
Well, I mean, does that change? Does that any of that? I mean, you say that you see that we're closer to the end than we are at the beginning, but I do wonder, do you think that there will still be some fallout of properties just because the world is changing when it comes to real estate?
I think there will be, and I think it would be, remiss of me to say that, or putting my head in the sand if I didn't say, look, I think the way that, for example, office, that's the big elephant in the room, right? How is office going to come back, and in what fashion, and how is demand going to be? Well, it's a mixed bag. You see some new developments that are 50 and 60 and 70% already pre-leased, and I think it depends on where they are and what type of office space you have. So new is generally good and popular. Old is probably going to struggle more, because we will work a bit differently. I think we will see people working more remotely than they have historically, and the trend will be a downward trend in demand, offset by when the economy recovers and starts to grow again, and there's more demand for space. So there are going to be some lasting impacts, particularly, I think, in the office arena.
All right. Hey, Gil, sit tight for a second. I got to do a bit of news, but we're going to come back and talk a little bit more. I am also curious when it comes to office space, that whole open office space, which everybody has been moving towards, whether or not that's going to kind of come to an end. We're going to get back to Gil Baruch. He's U.S. President and Chief Executive Officer for the U.S. operations of Colliers International. We'll get to him and continue that conversation in just a moment. Do want to get back, though, to world and national news. A lot going on this Thursday. For that, it's over to our D.C. newsroom and checking in with Nancy Lyons. Hey, Nance.
Hey, Carol. Well, sitting at his desk for a brief ceremony without a prepared speech on the subject, President Biden this afternoon signed 2 more executive orders. They restore health-related regulations from the Obama-Biden years. Bloomberg's Irv Chapman has more from Washington.
President Biden opened a 3-month additional enrollment opportunity for Obamacare and restored government support for health nonprofits that provide information on abortion.
I'm not initiating any new law, any new aspect of the law. This is to undo the damage Trump has done, restoring the Affordable Care Act and Medicaid. And the second relates to protecting women's health at home and abroad, as it relates to reproductive rights.
Republican senators, including Mitch McConnell, took the floor to support the anti-abortion March for Life, which today had to be virtual. In Washington, Irv Chapman, Bloomberg Radio.
Democratic and Republican lawmakers have written to House leaders asking for extra security in light of the Capitol riot. More than 30 House lawmakers have signed on to the letter, which requests flexibility in spending their allowance money so they can hire armed guards and upgrade their security. House Speaker Nancy Pelosi says it is appalling how House GOP leaders have overlooked comments made by Congresswoman Marjorie Taylor Greene in giving her a committee assignment.
Assigning her to the Education Committee when she has mocked the killing of little children at Sandy Hook Elementary School.
Green has said that such school shootings were staged. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. So Charlie Pellet joining me once again. We're going to get back to the president and CEO of Colliers International, overseeing the U.S. operations. We'll get back to him in just a moment. But there is a story on the Bloomberg, Charlie, that caught my attention. It's about the Prism Outlets Mall. It's about a 40-minute drive south of Las Vegas on the California border. It lost 95% of its value in 6 months. And our story by our Bloomberg team saying it may not be the last mall to do so.
Indeed, I know this mall well. It's on I-15. Literally, as you're driving from California heading into Las Vegas, you say it's 40 minutes south of Las Vegas, which is true, but it is literally just across the border. I mean, the property just borders right up against the state of California there. It's a bathroom stop. You can play your first casinos right next door. And of course, if you like outlet malls, as I do, you can go right to the Prism Outlets. Also used to be known as Fashion Outlets of Las Vegas. And it's all about the reduced prices here of these malls. It was auctioned off yesterday at a final price of $1.525 million. I like bargains. I'll take two at that price. And that was after a $28.2 million appraisal back in July, according to a person with knowledge of the results.
That's it's a big difference.
It's a huge difference.
Yeah, and apparently it's the first auction of a property linked to a so-called CMBX6. It's a commercial real estate credit derivatives index with heavy exposure to shopping centers and malls, according to our data here at Bloomberg. But a principal at a hedge fund, MP Securitized Credit Partners, says we expect mall liquidations to continue. 31 of the 39 malls in that CMBX 6 index are currently impaired.
Indeed. And you know what, Carol, this is a story that you can go so many different directions in. We can talk about what the Wall Street pros are doing with this kind of property and valuations, but also to the consumer aspect of all of this. Who's going to malls? Now, I would suggest who's going to outlet malls. That might still be a very viable business model, but they've got anchors like H&M, Nike, Williams-Sonoma. But whenever I'm in Las Vegas, I love the outlet malls.
Not a lot of people going to malls, though, during the pandemic. Just saying. Thanks, Charlie.
Just saying.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet, developing story. According to sources, Robinhood Markets, the trading app that's popular with investors behind some of this month's wildest stock swings, has drawn down some of its credit lines with banks. The Senate, meanwhile, is planning a stock mania hearing as Alexandria Ocasio-Cortez rips Robinhood's Senate Banking Committee, said to be holding hearings on the current state of the stock market. That is a quote, and no word, though, on when those hearings will get underway. It was an update on Wall Street. Sharp reversal from yesterday. The Dow, the S&P, and NASDAQ all advancing today. We had the S&P up 36, up 1%. The Dow up 300 at the close, also up by 1%. NASDAQ up 66, up by 0.5%. Final numbers do not tell the entire story. Stocks were a lot higher. We finished well off session highs, but an update nonetheless. NASDAQ 100 index up 0.7%. Russell 2000 did have a loss of 0.1%. Dow Transport's up today by 1%. 10-year down 9/30. 10-year yield 1.04%. Gold down 0.1%. 18.42 the ounce. And West Texas Intermediate crude down 1.2%. 52.22 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, Charlie, thank you so much. You're listening to Bloomberg Business Week. I want to get right back to Gil Barak. He is the U.S. President and CEO of Colliers International, still with us on the phone from L.A. So, Gil, let me ask you, offices, wide open spaces, right? That has just been the thing. At Bloomberg, it's been in our culture from day one, this whole idea of open spaces and no real offices. And then we saw it really take off with all of the tech companies, right? It was the cool thing, the right thing to do, and everybody got away from offices. Will we stay with it? Do you think that changes significantly?
Yeah, in the short term, conventional wisdom would suggest that that's probably not a good idea to be desk sharing, right, and to be so close to each other without some kind of plexiglass separation. I think it remains to be seen, because if you reconfigure offices, there is a capital cost to doing that. And I think that in the short term anyway, my own sense is we can manage it a different way. So, for example, have half the employees come in on Monday and Wednesday and the other half on Tuesday and Thursday. A lot of people want to work remotely a little bit anyway after the pandemic. And that's sort of, and a lot of people can work remotely quite effectively. So I think we're going to come back in stages, and it sort of does remain to be seen what the long term holds. I think we'll get back to it. I think there is a camaraderie and a productivity to having open offices. I think people like it and have gotten used to it. And if it weren't for the pandemic, nobody would think twice about it. So there'll be some short to medium term restraint on that type of setup. But I think over time we can evolve back to it, particularly if the vaccines are effective.
All right. So what about retail? We just did a story about a mall out in Vegas.
Yeah,
and it's not a new story, Gil, right? Like, we've been talking about it for a year. We're overstored, we're over-malled. And I do feel like mall developers are getting a little bit more strategic in terms of where they put a mall. So what do we continue to see on that front?
Yeah. So I think, retail is, it has obviously suffered, and it has for years, as you say. And the pandemic obviously accelerated and deepened that suffering, if you will. But I think that malls that offer an experience, and it used to be that you'd think of that, okay, that has to be an outdoor mall. Not necessarily so, because you have some of these new malls that have been developed, unfortunately, maybe not quite gotten off the ground because of the pandemic, but they have attractions, whether that's roller coasters or attractions for kids or whatever it is. Those draw crowds, and of course, then they shop, right? And so I think if it's a new mall, if it's an exciting mall, if it's in a good location, maybe good restaurants when we get back to normal, those I think are ultimately going to be fine. The malls of the type you're talking about in somewhat of a remote location, it's not entirely remote because there's a lot of car traffic and outlets people would stop on the way to Vegas. It makes sense, but they're not surviving very well in the pandemic. Maybe they come back, or maybe some of them come back, but then whoever owns them sort of has to have the wherewithal, the capital to keep them going until things turn around. So that's why they're sort of falling a bit by the wayside, and they may have to be repurposed. Now you say, well, what's that repurposing?
Yeah.
I don't know, but I do know that developers and owners are are creative, and whoever paid $1,525,000 for that mall has some idea of how they might repurpose it, to get a return on that investment.
Well, when you look at properties that you want to be involved in, what's changed? How have you been impacted by the last year?
Look, I think you've got to be thoughtful about how you make investments, and it's the truth about the stock market or anything else that you're going to invest in, right? So you've got to look at where the trends are going, and that's what we would advise our clients. Where are the trends going, and what's the pricing? And some clients, it has to do with their risk, right? Their risk profile and how risk averse they are. Somebody's buying assets for a cheap price or cheaper price because somebody else is concerned about the future of that asset, and there'll be winners and losers is what's going to happen, right? But if you're a conservative investor, you might right now you might be investing in places and thinking about places that are the next industrial boom, right? Where eventually we're running out of space in the traditional industrial hubs. So where's the next best space? Because that's here to stay. I believe that e-commerce trend, the growth will slow, but it's here to stay. And if you're conservative, pretty good place to put your money.
Where do you think the next industrial hub will be?
Oh, I hadn't anticipated that question.
You set me up so well.
I don't want to answer it in a milquetoast kind of way, but obviously it's got to be where there's access to freeways and access to ports, and so those types of hubs are constrained by geography. Obviously, the big ones are the big port cities: Los Angeles, Long Beach, San Francisco, to some degree. Then you've got them obviously on the East Coast. You've got it in Texas. So I think what we're going to find, I think, is expansion close to where they are, but maybe you're going to have a half-an-hour drive, right? A very manageable drive to the next hub. They can't go into the middle of the country. It doesn't logistically work.
Right. Hey, what do you make of, we've done so many stories about people moving to Austin. I was just having a conversation with somebody the other day, or moving south, and whether it's Elon Musk or Oracle to Austin, whether it's increasingly financial firms to South Miami. So are those real?
They are real. I mean, there's definitely a trend. You do get some firms saying the counter, right? We're sticking it out in New York City, right? I think BlackRock was one who came out and said that, and there have been a handful of others. It is real, and it stands to reason, right? If you can work remotely, and we currently are, many of us who have office jobs, and it's been effective, then you can move to cheaper locations. Now, the catch, of course, and people don't talk about this as much, is a number of companies that have said you can work wherever you want, but by the way, we are going to change your compensation to match the cost of living. And then the question becomes, in an Austin, if it does get an influx of people, and for years people have gone to Austin, but now in a bigger way, right, is the cost of living going to go up in Austin? Stands to reason it probably will.
Yeah.
So it'll be interesting to watch.
Right.
And, things tend to revert to the mean, so I think maybe it's there'll be some lasting impact, but I think a lot of people will also come back when things normalize.
Yeah, somebody talked to me about a house in Austin, and there were like 85 bids on it, or offers. Right. So crazy stuff. Gil, so nice to check in with you. Gil Barak, he is U.S. President and CEO of Colliers International, with us on the phone from L.A. Coming up next, Sound On is coming your way. Kevin Cirilli is off. Jeannie Shanzano is back with us, Bloomberg contributor and political science professor at Iona College. What's on your plate?
Hi, Carol. You're making me want to move to Austin because it's so cold here in New York. We're going to be talking a little bit more about this Reddit uprising, and we're also going to be later talking to Representative Houlihan.
Oh, interesting. Yeah. That was one of the big headlines that we saw, Jeannie. The Senate panel holding hearings, or expected to, on the current state of the stock market. So we shall see. Looking forward to that. Check out Sound On with Jeannie Shanzano. It is coming your way in just a few minutes. GameStop, one of our big stories, no doubt about it. We're still on the virus, got to be, and we'll continue our coverage certainly into the Friday trade. It's Friday's Eve, everyone. Have a good and safe evening. For our Bloomberg Business Week team, it's Tim Stenovic. I'm Carol Masser, and this is Bloomberg Radio.